morning, good evening, good afternoon, traders and students all around the world. This is FXPassion, broadcasting live on YouTube. Hello Salbakti, how are you? Happy Monday to you. Everybody, this is Forex Trading Course 101. And what we are trying to do here is to build the 3 pillars, right? Remember everybody, this is basic stuff, okay? This is basic stuff. This is not advanced stuff, professional stuff. This is basic stuff, you know? This is your starting point if you want. And if this is your first time with us, everybody, we are in the intermediate module. So we are passed over the basic and the beginner module, and we are learning about the Fibonacci's. And if you don't quite understand what is happening, how, why, please go back on Ducascope YouTube webinar page and start to watch the lessons starting from the beginning, okay? Basic module, market structure. Hello Zuelius, como você está hoje? Hello King, how are you? Hello Miguel, how are you? Hello Maingalia, how are you? Oh, thank you for the mister, thank you. And so the 3 pillars, everybody, is the strategy and our system, and we are going to talk about this today. We are going to form a simple trading strategy because we are going to talk about the rules for trading, and then we are going to learn about risk management and the big one, you know. Oh, I don't want psychology is the big one. And what do champion beginner traders say? They always say, I am not going to live and die on a trade by trade basis. And this is a quote from Mark Douglas. And this is my quote, you know. You can remember when you trade, when the market scares the beep out of you, don't be afraid to do the right thing. What are the right things, everybody? The right thing are the rules, and the right thing are the concepts. Okay? And remember, 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. And for homeworks or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. Okay? Salbati, doing great, mental passion, thanks. Ha 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 ha. We are going to see tomorrow, you know. No, I'm just joking. Mangala is saying, it's my first time on your live chat, but I am watching you 2009 videos and I love them. Mr. Crystal, oh, you're Crystal Ball. You are Crystal Ball, nice, very good. We had a Crystal Ball, FX Crystal Ball some years ago. Okay everybody, so that being said, let's jump to the charts and let's find an entry. Let me think. Okay everybody, let's open Canada JPY and we're going to talk about the rules. So the pictures, Fibonacci, there you go, right? The pictures, Fibonacci trading, contrarian, confirmation, original one. This is the picture, so please take a screenshot or a photo or whatever. What is the rule saying, right? For high probability trades, we should always enter in extensions and in the same direction. All other trades are low probability. And remember everybody, this rule, it's not considering the C, okay, but it's direction. Things to remember, the higher time frame controls the smaller, the Fibonacci is stronger than the trend line, and we want to buy, sell the C and other stuff. Okay, let me check the charts everybody. Let me check the charts. Canada JPY. Okay, There you go. Daily chart, okay? And we're going to delete the indicators. We are not there yet, not there yet. Okay? And weekly chart. Okay. There you go. Delete, delete. Okay, everybody. So this is how it goes. We have delete the indicators. We are not there yet. Delete, delete. Okay. So rules for trading the original Fibonacci. Okay. Is just an example. The time frame is just an example. Okay, and the currency pair is just an example. Okay. Passion, I don't mean to interrupt, but I have one question about the Fibonacci. Are there cases where the Fibonacci can be drawn on a single candle? Answer: yes. It happens time to time. The answer is yes. But you need to be aware that Fibonacci is a sequence, so you need to send me send me a picture send me a picture on an email or Skype or whatever, okay? So I can check. The answer is yes. But you need to be aware when this happens, okay? It's not always, okay? Or let's make a complete answer. Yes, when you don't have a sequence, okay? Now, everybody, this is our confirmation time frame, right? And we are going to trade this one, okay? We are going to trade an original Fibonacci in here. This is our original Fibonacci on the weekly, just an example, and we are going to trade the daily in here, right? Why we are going to trade the daily up, everybody? So this lesson today, it's an upgrade, okay? It's an upgrade. Tell me, everybody, if we have a down Fibonacci on the daily, original one, like this, I cannot compress more the chart, why are we going to trade the weekly? This lesson, it's an upgrade from the previous two lessons when we talked about multiple time frame trading and the Fibonaccis. So question, if our original Fibonacci is down on the daily chart and our original Fibonacci is up on the weekly chart, why are we going to trade an original Fibonacci on the daily chart up? Everybody? Call me Tembo, my name difficult to pronounce, I will send you an email. Okay, Tembo, great. Question for the Fibonacci traders, and I have a 20 seconds delay. If our original Fibonacci is down on the daily, right, because the swings and the market structure on the daily it's like this, why are we going to trade an original Fibonacci on the daily up? And this is the weekly that we are looking for. What concept are we going to use? Everybody? What concept are we going to use? And I'm going to help you. Let's do it like this. So you have one by one. Where is the... See where is the A, everybody, on the daily? The A is at 927 something, 9.27 something. So we need to make decisions as traders, and we need to make decision, should we wait for the market to come all this way up to trade the original Fibonacci? Should we wait for the market to go up until here? And on the daily chart, right? On the daily chart it would be like this. Daily chart. Should we wait and wait for the market to come all this way up 7 to something, right? So 7 to something. We are here right now. We are here right now. So should we wait for the market to come to come to the level 92.7 something and break the A of our original down Fibonacci, or should we trade this? Because the higher time frame controls the smaller time frame. Yes, sir. And because the weekly has a conformed C. Yes and no. It's not C related this time, everybody. Rule: for high probability trades, we should always enter in extensions and in the same direction. No C there. If you can see, everybody, I'm not saying that the C is not important, but when we compare the confirmation time frame and the trading time frame, we need to trade in the same way. I mean the same direction. Miguel, hello Salbakti, do you have any news from Passion? What news, Miguel? Do you have any news from... I'm here, Miguel, you can ask me directly, you know, no problem. Okay, everybody, so what are the rules? Well, we are going to go on the daily chart and we are clear on this, right? The higher time frame controls the smaller time frame, and there is no right or wrong, everybody, but it's a decision, you know. Okay, so if you are going to trade this upswing, it's okay, right? And if you are going to wait for the market to break the original Fibonacci, it's still okay. Okay, either way, the answer is the original Fibonacci on the weekly, and what we're going to trade equals to the contrarian Fibonacci on the daily. Okay, just for you to understand what is happening, this Fibonacci here is valid. Let me say if the market hit the level. Not yet. Okay, so this Fibonacci here is valid, and maybe I'm doing a mistake, but let me check. Transparency and blue. It was blue and red, right? So let me check, everybody. Red goes to red. Maybe I didn't red. No, I didn't hit the red yet. Okay, so this Fibonacci is still valid. Okay, and we're going to trade the upswings from the weekly. So we're going to, this is going to be the A, this is going to be the B, a little bit like this. We're going to put the letters very slowly, and then we're going to talk about the rules. This is our A text, this is our B text, this is our C and text, this is our D, and green goes to green, right? Now I need to double check. This was the A, lowest low, it's here, and this was the first high, and the C didn't cross the blue, so green goes to green. This is our C, and the green is up in here. This was our D, And what we are going to do, we are going to adjust our Fibonacci, and we have a new sequence. This is our C, A, B, C, D, right? Okay, so rules for trading the original Fibonacci. Okay, everybody, is it clear about why our Fibonacci on the daily chart upswing is the original one and not a contrarian one? Is it clear? This lesson is an upgrade from the multiple time frame trading. Okay? Because this Fibonacci here, it's a contrarian from the daily, but it's the original one from the weekly. And because the higher time frame controls the smaller time frame, we are going to trade this one. Okay, now simple trading strategy, everybody. Rules for trading, right? Simple. Now Fibonacci trading, everybody. Don't mix apple with bananas. Different patterns have different rules and different concepts. Okay, Fibonacci trading, simple trading strategy. Simple trading strategy. Is it not clear? What part, Zuelius? What part is not clear? Why we are going up? Not clear. What part, King? Oh, maybe I know. So this was the lessons from Wednesday and Friday, right? We had multiple time frames, and we had the monthly, right? And then we had the weekly, and we had the daily, right? We had the daily, and then we had the 4-hour chart. 4-hour chart, 1-hour chart. It's confirmation with the weekly. Yes, sir, Victor. Congratulations. Yes, Victor, thank you. Correct. How is your hedge fund doing, Victor? So monthly, weekly, daily, and this is just an example, you know, and we are in an uptrend, like something like this. Okay, so the original Fibonacci on the weekly, it's like this, just an example, right? And clone. This is the daily, right? And we are going to trade this one. Okay? And this circle equals this circle. Okay? And as Tembo said, you know, we need to check the probabilities, you know, but if the higher, if it's true, right? And if FXPassion knows what he's talking about, if it's true, I don't know, you know, I'm a skeptical beginner, you know, if it's true that the higher time frame controls the smaller time frame, you know, what is more risky and what is less risky? Because why are we using a original and not contrarian? Zuelius, you are using both, but just to be clear, it's just a matter of vocabulary, you know. So it is a contrarian on the daily, but it is an original on the weekly. Okay? You need to understand, everybody. So this is why trading is kind of complicated, you know, in the beginning, because when we are watching just at the daily, you would say, oh, but going against the daily Fibonacci is more risky, right? But when you know that the weekly is up, you know, then between the battle between the weekly and the daily, who has more force? You know, who is the father and who is the son? The grandfather is the monthly. Who is the father, the weekly or the daily? I mean, talking about probabilities, it's better to trade the weekly direction, not the Fibonacci, the direction, or it's better to trade the daily direction. And also risk reward, yes, step by step. Okay, Zuelius? Everybody, we are using different terminology just to understand what we are talking about, you know? Because if I'm telling you that I am going long on the original Fibonacci on the daily, this is not true. This is a contrarian. But if I'm telling you that I'm going long on the daily chart, but I'm trading the original on the weekly on the daily chart, now I have a different relationship, don't I? You are predicting that the market will change direction in the daily, then you are anticipating the original Fibo. No, I'm not anticipating the original, it's there already. It's there already. I'm not predicting anything, Zuelius, I'm just following the concepts. Man, if I would be able to predict, you know, woohoo, I would be a zillionaire by now, you know. Everybody, just a different terminology, you know. I'm not predicting anything, I'm using the concepts. Okay, clear, great. So, see, I already have higher highs, higher lows, and I have the second Fibonacci. Fibonacci trading, simple trading strategy, everybody. So this is an upgrade from the basic module and the beginner module. Namaste Patak, how are you? Okay, this is an upgrade lesson, so edit, or maybe we can text. I am going to enter when number 1 CTB stands for counter trendline break, number 2 bullish, in this example bullish candlestick formation, number 3 past support, and number 4 risk reward must be minimum 1 per 2, and 5 stop loss A or C related to risk management. Okay, everybody, we are talking about now what is critical for you to understand, everybody, is don't mix apples with bananas, in the sense that Fibonacci is one pattern that we are trading. Okay, don't mix different patterns. So what are patterns? You know, we call them also stories. So you could be trading structure. Okay, this is one pattern. You could be trading the short-term trend. You know, this is another pattern. You could be trading the Fibonacci. This is another pattern. You could be trading double tops. It's another pattern. You could be trading triple or whatever bottoms, you know. This is another pattern. You could be trading sideways movement or consolidation. This is another pattern. So it is critical, everybody, that you understand not to mix the patterns, because every pattern has its own rules, concepts, and stop loss and take profit levels. Okay, if you go long on the Fibonacci, is not the same if you go long on structure, and it's not the same if you go long on triple bottom, and it's not the same if you are buying consolidation. Those are different, some of the different patterns, and every pattern has different concepts and different rules to obey. Are we clear on that, everybody? Like a general, you know? Are we clear on that? Okay? So, talking about rules for trading the original Fibonacci, I am using, it's a simple trading strategy. I'm going to enter when I see a counter trendline break, bullish candlestick formation, pass support, risk reward minimum 1 per 2, and we're going to talk about this. And number 5, stop loss A or C related to risk management. And of course, because I just said that different patterns have different rules, where is my take profit going to be? 6, take profit at the D. Those are the rules. It's a simple trading strategy, nothing special about it, you know. Now, let's see. Do I have a counter trend line break? I cannot break the, so I don't have the, I cannot cross the wicks of the candles, but okay, yes. So let's check, right? Counter trend line break, check. Bullish candlestick formation, happened once, twice, 2, happening now. Daily chart, I need the whole day, but this is bullish candlestick, 2 bullish candlestick, so check. Pass support, let's see. Did the change in the short-term trend happen at some level of pass support? Yes, it did, right? Pass support, well, maybe not the perfect one, but still the wicks connected to each other. So check, check, check. Now talking about risk reward, right? So let's see if we are going to earn 2, just graphically, not to waste the time. If I enter right now, if I enter right now, so this is my reward and clone. Let me see my risk. So stop loss below the A, and let's do it like this and clone. It's 1, clone. There you go. So it's not the best one, right? Now I have a rule, everybody, that risk reward should be minimum 1 per 2. Question: boss, should I enter, yes or no? What do you think, everybody? It's a yes or no question, everybody. Should I enter? Yes or no? And remember, those are my rules. If this is a strategy, everybody, Zuelio says no. Everybody else? Anybody else? If this is my strategy, everybody, and this risk reward is a rule of my strategy, should I answer yes or no? No is because it's a non-negotiable rule. Congratulations! Great, so the answer is no, right? Now, what can I do? And it's critical, everybody, that you understand this. It's my choice, it's my decision, okay? It's my decision. What can I do? I can enter right now, and I can put my stop loss below the C, right? Because number 5 is saying stop loss A or C related to risk management. Can I do like this, everybody? Can I put my stop loss below the C? And the next question, am I breaking any rules by doing this? Everybody? So, two questions for you. Number 1, can I do this? It's a yes or no question. It's my decision to do it. I can decide to stay out, or I can decide to move my stop loss below the C. It's my decision. So question number 1, can I do this? And number 2, am I breaking any rules? Zuelio says yes, you can do this. Next question is, am I breaking any rules? And talking about Fibonacci trading, everybody, you must, so this is the decision that we as trader must make, you know. Should I put the stop loss below the C and risk of being stopped out, or should I wait for the next Fibonacci swing? And in this sense, everybody, there is no right or wrong. What would you do? Patak says yes and yes. Not break any rules. Yes, you can, and you are not breaking rules. It's my decision as a trader, right? But what is boggling my mind is, should I put the stop loss below the C and risk of being stopped out, or should I wait for the next Fibonacci swing? Because we know that this is a Fibonacci rule, everybody. It's a concept. If you put your stop loss inside the AB boundary, you are increasing your risk of being stopped out by 80%. So what should I do? You can also bring take profit to the weekly or monthly extension line. Miguel, you're right, but step by step, one by one. Step by step, one by one. So what should I do, everybody? Let's make a poll. Who in here? Now, remember, everybody, these webinars are not trading or investment advice, okay? But if you would enter right now, for real, you know, let's make a poll. Who would enter right now and risk of being stopped out, and who in here would wait for another Fibonacci swing? Follow your rules. Those are the rules, but still I need to make a decision. Salbakti says enter, and if you are stopped out, you can re-enter. King says put the stop loss below the C. You should move stop loss until the market break the B. Okay, everybody, so you are making decisions, great. Now, if I enter right now and the market goes up and reverses and stops me out, did I make any mistakes? Did I do any mistakes? So we are making decisions and we all decided to buy the market right now, and if the market reverses and stops us out, did we do any mistakes? Is this a mistake or this is just normal part of trading? What would you say? Patak says you should not move stop loss until market break the B, but market is in consolidation, risk is breakout. Everybody, what should I do? Or we agree that we are going to buy the market, right? If the market reverses and stops me out, meaning the market is going to find another D or C, did I do any mistakes as a trader? Or you take the C out of your rules or follow your rules. As well as I don't need to take out the C and I'm still following the rules. So the question is, everybody, what do you say? Did I make any mistakes? It's not a mistake, correct? It's not a mistake, right? It's a normal part. Yes, sir, very good. So this is 1, 2, 3, right? We have the counter trend line, bullish candlestick formation, past support, risk reward we just adjusted, right? Now stop loss A or C, it's related to risk management. So what's the time? Okay, we have enough time. So let's say that I have capital, let's say that I have $500 US, and the risk per trade is 1%, right? Risk in pips we need to calculate, and the risk in money, it's $5. So 1%, it's $5. And risk in pips is what we're going to. So now I need to see also if I can put, if I want, right? If I can put, so we are at number 5. I need to see if I can put my stop loss below the A, risk in 1%. The market decides to retrace deeper, no mistakes. Okay, great. So what is our entry? Well, our entry is at, so risk in pips equals to entry price minus stop loss price. Okay, so I have $500. Risk in pips is entry price minus stop loss price. This is why we are on the daily chart and not the 2-hour, because in the 2-hour it would price would move already. So what? Okay, great. So just an example, right? So we are at 79200 minus 74681 equals to, who can help me, everybody? How much is 79200 minus 74680? Can somebody help me with the calculator? And if you're asking where did you get 74680, remember you cannot put the stop loss on the A exactly, because if the market touches the A but it doesn't break, the Fibonacci is still valid. So black goes to black, 0 goes to 100. So we are going to put a stop loss 10 pips or 100 pipettes lower than the A. You know? So it's 79200 minus 74680. How much is this? Okay, 4520. Thank you. So this is 4520, right? Okay. Thank you, Salbakti. Thank you, Zoelius. Those are my risk. This is my risk in pips. This is how much pips I'm going to risk. Okay. Now, not to waste the time, we are not going to calculate the pip value. We are just going to do a simple calculation. Okay. So, risk in pips is this one, and risk in pips is, we said it's 420. Okay, now what is the volume or how many lots, right? So volume or lots that we can trade according to our stop loss. You know, it's a double calculation. Sometimes it's 5 divided 4520, and sometimes it's inverted. Either way, we need to make a calculation. So in this example, we're going to do 5 divided 4520. And edit label. This is risk in money divided risk in pips. Remember, sometimes it's inverted. Okay. So let's see if we have enough capital, you know. So how much is 5 divided? How much is 5 divided 4000? Okay, just to make it quicker. Let me find the calculator. Apparently I don't have one. Oh, I have. Okay, so 5 divided 4520 makes 0001, right? This equals, if I didn't make any mistake, equals 0.001, right? Okay, now I'm going to exit the full screen, and I'm going here, you know, and I'm going to buy the market, you know, and my stop loss is going to be at, not points, price. My stop loss is going to be, what did we say? Stop loss is going to be at 74.680. This is my stop loss. And units, you know, if you want, thousands, lots. What can you see, everybody, from this calculation? What can you see? Can I enter this trade with the 100 bucks? 500 bucks, I'm sorry. What can you see from, look at the amount of lots. Can I enter a 0.01 trade, and can I enter a trade with 0.001? Can I do this? In other words, can I put the stop loss below the A if I have 500 US dollars? Everybody, can I do this? I can't, right? No, of course not. I don't have enough capital, right? Now I cannot do this, right? Now what I can do as a trader, well, I can put my stop loss below or above, in this example below the C, right? So let's make the calculation. My entry price the same, stop loss price is going to be at, I'm going to delete this one, so this is the C, stop loss price is going to be at 78065. And how much is this one? 79200. And I'm going to use my calculator to speed up the process because I have a 20 seconds delay. 79200 minus 78065 equals to 1135. 1135. So I'm going to delete this one. So how much is, okay, how much is 5 divided 1135? And the answer is 5 divided 1135 equals to 5 divided 1135 equals to 0.04. Am I correct? 0.004. Hello, learn to trade. How are you? 1135. Zuelius or somebody, can you check for me? Is 5 divided 1135 equal to 0.004? And transparency like this. There you go. Maybe I did a mistake, I don't know. Is this number correct or makes sense, right? Because we were risking 4,000 and now we are risking 1,000, so it's 1135 would make sense, right? Correct. So no capital, right? And again, what should we do? What can I do? Well, I can do two things, you know. I can increase my risk per trade to 2.5%, then would be 0.01, right? But it's my decision, you know. And hey, Passion, but what should we do? You know, I don't know. I mean, as well, you said follow your strategy, but if you see that you don't have enough working capital, you know, don't trade from the daily chart. This would be one, you know, because if you risk 2.5% on one trade, 5 trades and you're out of the business, you know. But this is the way to go. So what I'm trying to teach you, everybody, today, how can you adjust or change the number 4, how can you adjust and change the number 5, but in the end, if you don't have enough capital, and some of you simply don't listen, you know, if you don't have enough capital, simply don't enter this trade. You are going to violate your rules. .04, so your volume should be. See, yes, I know, Salbakti. Okay, so, and some of you don't listen, you know, some of you are, oh, but this is, I mean, look at the weekly chart, you know, this is such a nice entry. I mean, you have, it's like kind of a position trade, and you have 1, 2, 3, 4 bottoms, you know, 5 bottoms, and this market is going to go up, and look at the profit potential and everything. You don't have enough capital, you know, and some of you won't listen, right? And you say, Yeah, don't tell me no, you know, I've been there, okay? I've been there, do all the stupid things, you know, and I would think, oh, but I know that the market is going to go up, right? Well, what if you're wrong? What if the market is going to push lower one more time? Are you willing to risk 3%, 5% on one trade? You know, this is the question. What would you say, everybody? Oh yes, but it's a nice, I know it's a nice trade on the weekly and even on the monthly, you know, but we have only 500 bucks, right? What can you do? Well, we can do different things. We can try to find an entry. We don't have time today, but we can find an entry on the 4-hour chart. And if still we don't have enough capital, we can find an entry on the 2-hour chart. I am going to cancel this, you know, so no trade for us. Bye bye. I'm not going to enter. No entry for me on the daily chart. Okay, everybody, our time is up. Tomorrow, what is going to happen tomorrow? Tomorrow we don't have the webinar. I don't have time, unfortunately. Wednesday, Thursday, Friday is going to be normal, but tomorrow I don't have time, I'm sorry. But if you want, everybody, tomorrow after the time of the Stohastic webinar, I'm going to have a quick call to show the next generation charting software. So if you want, just send me a Skype message, connect to me with Skype. Okay. Tomorrow no webinar, but after the webinar time I'm going to take just quickly 20-25 minutes, because some of you are asking, oh, what is this next generation's charting software and so on. I'm going to show you just briefly, you know, so you know what we are talking about. And again, it's not a platform, everybody, okay? JForex is a platform and a software, okay? You have both integrated together. Tomorrow I'm going to just show you a software.